ICT has posted around 550 videos on his YouTube channel and it might be hectic to go through all of them. So my objective through this series is to simplify ICT's concepts and present it in a more concise way. So grab your notes as we head towards our first topic, that is order block. So there are basically 9 types of order blocks as listed on the screen, and you can note all of these and we will discuss all of these in the video. So let's move on to our first type of order block, that is the bearish breaker. When identifying bearish breakers, you must keep two things in mind. First of all, it must have taken the higher high. This is a stop run and signifies that the stops have been taken from these high. Secondly, there must be a lower low. This signifies weakness in the price action. Now how will you trade it? Once you know that there is weakness in the price action, you will mark this candle as the breaker block, and once price comes and retests this block again, you will place sell orders here with a stop loss somewhere around here and target these highs. So let's look at an example. Here you can see price took out the highs, created a lower low, and now if we get any wicks in this order block, we will try to sell. So we get a wick here, we place our sell orders here, basically a sell order here, and our stops will be somewhere around here, and we will target the lows, these lows. So this is how you will use to take trades from bearish breakers. Now let's move to our second topic, that is bullish breakers. Also, I have added 2 examples per order block, so you can view the second example in your spare time, because if I view the second example as well in the video, it will get too long. So let's move to our second topic, that is bullish breakers. Now to identify bullish breakers, you must consider 2 things. Firstly, it must have created a lower low. The lower low signifies a stop hunt, like the stops on the lows have been taken, and there must be a higher high. This signifies strength of price action. Now how to trade this bullish breaker? Once you know that there is strength in the price action, you will mark this candle as the bullish breaker, and when price comes and retests this breaker, you will try to long here with stops somewhere around here and target further highs. So let's look at an example. Here you can see this was the initial low and this was the lower high. Price took out this low, created a lower low, and further created a higher high. Now this is the breaker block. Once price taps it, you will take a trade. So here you can see price tapped here and we took a trade towards the upside. You could take a trade here, stop loss here, and target new highs. So once price created a lower low, then a higher high, we knew that there was a strength in the market. Then once it retested the breaker, we took our orders and placed a long. So I have also placed a second example for it, which you can view it in your free time. The link to the PDF is in the description below. So now let's move to a third type of order block, that is bullish order block. A bullish order block, simply put, is a down candle before a significant up move. So here you can see this was the down candle, after which we had a significant up move. So this could be considered as a bullish order block. Now how to trade these types of order blocks? Once you know that there is a strength in the market, you will wait for the retest of this order block here, and you will take longs after price has retested it and given a sharp reaction. Now one thing to remember here is that order blocks such as the bullish order block have many market and limit orders around them. So the reaction should be really fast if it is to be a successful reaction. But if the price starts stagnating here, you might as well cut the trade. So this is the order block, bullish order block. You have learned 2 things. Firstly, it is the down candle that caused the up move. Secondly, the reaction from the bullish order blocks must be fast because there are many limit and market orders resting here. Thirdly, for price to give an optimal reaction from this order block, the price must not cross the mean threshold. Now what is the mean threshold? Mean threshold is basically the 50% of the entire bullish order block candle. So suppose this is the entire candle of the bullish order block. Now the 50% level of this 0.5% is the mean threshold. And if you want a good reaction from this bullish order block, price must not cross the 0.5 level. That is the mean threshold, and it must give the fast reaction. So now let's move on to an example of bullish order block. So you can see this down candle caused a significant up move. So this could be considered as the bullish order block. Now when it gets retested again, I will look to place long orders here targeting new highs, at least these highs, and a stop below this. So exactly this happened. The order block got tested and we got a fast reaction and a long was successful. Also you can see that the mean threshold was respected here. So there is also a second example which I have attached, which you can see in your free time. Let's move to our fourth type of order block, that is bearish order block. So bearish order blocks are a complete opposite of the bullish order blocks. It is the up candle that caused a significant down move. Also the mean thresholds should be respected here as well, and there should be a fast reaction. However, you will look for sells or shorts when you see a bearish order block instead of longs. So let's look at an example. Here you can see on the price action chart, price came and we had a break of a structure of these lows and we created a lower high. Now price also retested this up candle which caused a significant down move, so we can consider this as a bearish OB, and when price retested it, we can place sells here with a stop loss right above here and target at least new lows. So this would be a successful trade. Also again, a thing to note here is that there is a fast reaction and the mean threshold is respected. So now let's move on to our fifth type of order block, that is reclaimed order blocks. Reclaimed order blocks are used for executions and they can't be used in isolation. You must combine reclaimed order blocks with higher time frame order blocks to give you a better trade entry. Let me explain all of this in an example. Now here the order block marked in blue is the reclaimed order block. As you can see, price first of all shot up from this down candle, then came and retested it, gave a slight pullback, but we knew that this is weak because it hasn't tagged the higher time frame support. So when it tagged the higher time frame support and reclaimed this order block, it was a time to go towards the top side. So let me explain it more with this checklist. First of all, you must understand that higher time frame order blocks are always preferred over lower time frame order blocks. Secondly, when you are taking a trade, you must take it from higher time frame supports and resistances. Suppose for example here you can go on the 4-hour and you can come here and see that price came into this bullish OB on the 4-hour. Then what I did was I zoomed on the 5-minute and looked for reclaimed order blocks such as this blue area. I looked for these types of order blocks to reclaim and then we punt along. However, you must note that I didn't take action without the higher time frame confluence. So this is what I'm explaining here. If price tags the higher time frame order block, then you can take a reclaimed order block entry. However, lower time frame order block tags and reclaimed block entries usually result in a lower win rate and a greater loss. Now let's come to our sixth type of order block, that is the bullish mitigation block. Now bullish mitigation blocks are formed when price fails to take the sell side liquidity, creates a lower high, then creates a break of a structure with a higher high, and when this bullish candle gets retested again, we take a long entry here with the stops below here and targeting these highs. So this is the basic structure of a bullish mitigation block. Now let's move to some examples. Here you can see price created a low, then a high, then a higher low, then a higher high. This could be considered as a higher high. Now as you can see, price was unable to take out the sell side liquidity as it created a higher low. Now when this bullish order block gets retested again, you will take an entry here and target the highs. So now let's move to our seventh type of order block, that is the bearish mitigation block. It is the completely opposite of the bullish mitigation block. It is formed when price fails to take the buy side liquidity, creates a lower high showing weakness, then creates a lower low to show break of a structure, and then when the order block gets retested, bearish order block here, you can see the down candle gets retested, you can take an entry here. Now let's move to an example. You can see price created a low, then a high, then a break of a structure by breaking these lows and then a higher low. Now when this bearish candle gets retested again, as you can see it got retested respecting the mean threshold, we expect to place sells here with the stop losses above here and targeting these highs. So let's move to our 8th topic, that is the rejection block. Now rejection blocks are of two types, bearish rejection blocks and bullish rejection blocks. Now bearish rejection blocks are basically the wicks of the top candle that created the down move. Basically, the wicks of the order blocks are called the rejection blocks. So here you can see we have an up candle that caused the down move, and if you extend the wicks of this candle, it would be a bearish rejection block. Similarly with the bullish rejection block, if you take the down candle that caused the up move and extend its wicks, you will create the bullish rejection block. Now how to trade it? Let's see in an example. You can see here this candle, this up candle caused the down move, and you can mark its wick as the rejection block. Now as price wicks into this block, you can see a fast reaction to the downside. You can place sells here with the tight stop loss above here and target at least these lows. So I hope it is clear how a rejection block works. Now let's come to a last topic of this order block series, that is the propulsion block. Propulsion blocks are candles which have previously traded into an order block and are now acting itself as support for the price. So you can see on this chart, this candle that I am marking with 1 acted as an order block for the up move. So price retested it with this candle which I am marking 2, and now this candle which I have marked 2 is acting as support for further price action. So this block that I have marked with 2 is a propulsion block and is supposed to respect price action and support it until and unless we are in an uptrend. So I hope this is clear as well. You can see the similar example is here. You can download all these examples and the PDF from the link in the description below. Thank you for watching.